Jeffrey Haig here again, and we're going to look at Chapter 1 in this little introduction. And remember, every time you're going to read a chapter, do not start from page 1 of the chapter. You have to go to the summary section. And in this case, and you'll see on the e-text, it begins on page 23 to 24. It summarizes the chapter. Skim the chapter, read the summary section, look at the key terms that I've mentioned, which I'll do at the end of this presentation, and then look at the homework problems and see what we're going to be focused on. You can't start reading this chapter right off the bat. You can if it's going to be your second or third time reading it, but hopefully you'll read the chapter once and then go back to those sections that are important and read those again, and you'll have completed getting the concepts down. So let's look at Chapter 1. Chapter 1 talks about who cares about taxes and why. And to think about this before we read the chapter is to make the distinction and understand the distinction between income and taxable income. Income can be from lots of different sources. For instance, if I'm retired and I get Social Security income, that's income to me, but it doesn't mean that I have to pay taxes on it. Taxable income, which is a key term, or the tax base in this chapter, taxable income is what I'm going to pay taxes on. Taxable income gets a tax rate applied to it, and there's my income tax. So remember, there's a difference between income and taxable income. And when a politician says he or she is going to lower taxes, how are they going to do it? Are they going to lower the rates? Are they going to lower the levels of how things get taxed? Are they going to increase deductions? So there's a lot of things you have to think about when they mention that short little sentence, I'm going to lower taxes. All right. And another thing to think about is that the tax law is complicated. The law is the law. It's there for us to use. Every few years, the Wall Street Journal gives 100 tax preparers the same tax scenario, the same set of facts, a fictional family. They give it to all these accountants to have them prepare a tax return. 100 people do it, same set of facts, income, deductions, the family. They get back roughly 75 to 80 different tax returns, different answers. So you can see 100 professionals who know the tax law can't agree upon how they would use the tax law in the same scenario. So just keep that in mind when you read this. That is complicated. But what you want to get from this chapter, from this whole class, is to know what's out there and to have a good foundation about taxes and how they work in our society. All right. So you've read the summary of the chapter, either on the hard copy of the textbook or the e-text. Who cares about taxes is on page 2 of the book. On page 3, there's a section called Taxes in the Real World. You'll always want to read that. Even if I tell you to skim the chapters, you'll want to read that section when it's in the chapter. There's probably a few of them in every chapter. Read that to see how taxes apply to the real world. What qualifies as a tax at the bottom of page 3? Because a tax is different than a penalty or a permit. A tax is something different. So understand what a tax is. If you look on page 4, the bullet points there, the first one says the payment of tax is required. It's not voluntary. We all have to file tax returns based if we make a certain amount of taxable income or income. But remember, some of the information we put on the tax return could be voluntary because the IRS may not know if we did make that income or did have that deduction. It's up to us as a tax preparer. Either we prepare our own taxes or someone else's. We have to be ethical and properly report all income and all deductions properly. How to calculate tax on page 5. So here comes a couple equations or formulas you want to understand for the homework and use for the homework, and understand for the quiz and use for the quiz. Marginal tax rate at the bottom of page 5. That's something I posted a couple times, and it's kind of talked about in the homework section, that once I reach a certain level of income, taxable income, let's say, I'll get taxed at a higher rate. So for instance, if I make $100,000, I get taxed at 25%, just making these numbers up. If I make one more dollar over that $100,000, I get taxed at 50%. So it comes to my understanding that the next dollar I make, I'm only going to take home 50 cents. So I question, why am I going to work for another dollar if I'm only taking 50 cents home? That's something you'll talk about in this chapter when people make decisions based on tax rates and how they change their behavior if tax rates change or if the tax law changes. Marginal tax rate, like I said on page 5, it shows you how it works on pages 6 and 7. Page 7, they talk about the average tax rate. What my average rate is based on my taxable income. And they give an example of that in example 6 about my average tax rate. Then they talk about the effective tax rate on top of page 8. They give a good example of the effective tax rate in example 7. Based on all my income, taxable and non-taxable, what is my overall tax rate? How much tax am I paying based on all my income? Page 9, starting there, tax rate structures. You can skim these pages, pages 9 through pages 11, just seeing what the tax rate structures are. Progressive tax rate on page 9, that's our income tax rate. Our income tax system is a progressive tax rate. The more you make, the higher rate you have, or the more taxes you will pay. Regressive tax rate. Regressive tax rate is like our Social Security tax, because at a certain level, if you make $106,000 roughly, you stop paying Social Security tax if you make more than $106,000. So people that make less than $106,000 are paying the same amount of tax as someone who makes $106,000 exactly, the same tax rate. That's something that people are always talking about changing. Okay? Regressive tax rate. Regressive tax rate is, like I said, this is a Social Security tax that we have in this country. Type of taxes on page 11 at the bottom, they talk about federal taxes, the income tax, the employment tax, the unemployment tax, excise taxes, transfer taxes. At the bottom of page 13, when someone dies, they have an estate tax, perhaps, or if someone gives a gift to someone, they may have a gift tax. So just look at those two terms and know that there's an estate tax and a gift tax. Page 14, they start talking about state and local taxes. Income taxes. California has an income tax, Nevada doesn't. That's one reason people move to Nevada after they retire, perhaps, or even before that, because there's no income tax in Nevada. And as you know, there's one in California, one of the highest in the country. Sales tax and use taxes, pages 14 to 15. Sales tax, we all know what that is, but a use tax may be new to most of you. A use tax is when a state wants you to pay a tax when you've bought something from out of state. For instance, say I purchased something online from another state, it comes here, I don't pay California sales tax. But California would like me to pay use tax on that, just based on if I don't pay it here, if I don't pay the California sales tax and I get something, I should pay use tax. Many people don't know about that. California is looking into that further and further, as are other states, the use tax. So know what that is. Property taxes on page 15. Then page 16 to page 17, you can just skim those 2 pages, implicit and explicit taxes. Once again, just people changing their behavior based on tax rates or based on how things are taxable or non-taxable. Different tax systems, page 17 through page 21. You can just skim those pages and know about the different tax systems that are out there. Start reading again in detail, page 22. On that page, we have 3 concepts: certainty. Taxpayers, individuals, even businesses, of course, want to have certainty about what the tax rate is going to be in the future. For instance, if the tax rate is going to increase in 2016 on taxable income, maybe I should do some planning and take more income this year and take more deductions, expenses next year. And of course, doing it all legally under the law, being ethical, but maybe I want to bring more income in this year because I'll be at a lower tax rate and push more expenses, deductions into the next year when tax rates are higher. Think about this. The law is the law, and we're supposed to follow what the tax law says. But it's up to each of us to pay no more taxes than we have to and no less taxes than we should based on the law. So certainty is important. Convenience should make it easy. If we're an employee and we get paid W-2 wages, W-2 salary, we get our taxes taken out automatically. That's convenient for us. Economy, there may be a big impact on the economy. But as you can see as we go into future chapters, that the tax law is not really based on logical or, rational thinking. The tax law may help people with buying equipment or making charitable deductions, going back to school, having children, social reasons, economic reasons. All these reasons make up the tax code. Buying a house, like I said, going back to school may influence your tax decisions. Economy. You'll hear this on April 15th every year. $60 billion in cost to prepare tax returns every year. Millions and millions of hours of people preparing tax returns because the tax system has just gotten so complicated every year, over and over as the years go by. Read the conclusion on page 23. Read the summary again. It all makes sense to you. Key terms on page 24. You have certainty, convenience, effective tax rate, estate tax, gift tax, income tax, marginal tax rate, real property tax, sales tax, use tax, sin taxes, tax rate, and then tax base. Tax base would be the same as what we talked about at the beginning, our taxable income. What is taxable? Discussion questions. Any discussion question you can post your thoughts on Blackboard, but ones I really find interesting or are helpful or good to talk about. Questions 1, 4, 5, 8, number 11, 16, 17, and 18, 21, and then questions 31, 32, and 33. Those would be good ones to post your thoughts upon. Of course, there's correct answers to all of these discussion questions, but some of them are just based on what your thoughts are. So there's no correct answer, just a way to get our conversation going, and that's part of your participation points in the class. Represents our class time we would have together if we were in the classroom. So I hope this has been helpful to you. And of course, you can always pause this video to take the time to look at what I'm talking about and then start again and look at it another time. I hope it gives you a good idea of what to focus on in this chapter and what some of these terms mean. And as you can see from the syllabus, we don't start with chapter 2 next week. We go to chapter 4. I feel chapter 2 and chapter 3 are good after we cover a lot of concepts at the end of the class. Chapter 4 and chapter 5, we start getting into more of the tax law. You notice in this chapter there's no tax law in chapter 1. Tax law, or what the rules are, gets talked about in chapters 4 going forward. In chapters 4 and 5 and 6, we start preparing tax returns, and you'll do that on Connect Accounting to take the actual rules and put them on the tax return. So I hope this has been helpful, and I'll see you in chapter 4. Thanks.